Let's say you wanted to long the market, buying some stock or a coin, and something prevents you from pulling the trigger and press buy button. And then the worst possible thing happens. The market goes up and you start counting the money you're missing out on because you didn't long at a time. Fear of missing out will cause you to want to break your trading rules in the most inappropriate place. You know what I'm talking about. Want that profit, right? And here is the temptation to not follow your rules just this one time. This trap is easy to fall into, even if that long position wasn't realistic. For example, there was no setup according to your trading system. Still, you mentally beat yourself up for missing that trade. Now, you see the setup clearly back then and the exciting results that are possible. FOMO says you shouldn't have missed out such a big move. You feel like you lost the money that you would have made if you'd gotten in on the trade. You play the trade over and over in your mind, thinking about the things you did wrong. The price was going up. Now it's consolidating. And that is the time for different strategy. So you trade different setups now with another risk reward. But your mind still expects that profit you missed. Be really cautious here. That's how FOMO shows it's still present. Even if you've convinced yourself you're free from it and you're good now. Please think of it for a minute or listen to this video once again when it's finished. It's time for a small pause to remember that a trader with good self-discipline but a poor trading method will always outperform a trader with poor self-discipline but the best trading method available. One thing we must remember: you must have your best interest in mind and not allow all of your profit to evaporate, even if that means missing out on the big move. No matter what caused missed opportunities, let's make it easy. Because, fear of missing out will always be there. Oh, it will come back one day and actually help you become more profitable trader. Okay, you missed out, you know it. You've already counted missed profit. You see that number. How perfect this trade could be. Now imagine you've got opposite trade. Then this number would be a loss. So you haven't lost anything, and actually you've preserved your deposit. Up here in consolidation, you don't use the same trading method you would use in that imaginary FOMO trade. In our example, it was long. Let's say you wanted to trade it using breakout strategy. And now, knowing you're in FOMO, do not trade breakouts anytime soon until FOMO is gone. Instead, use another method and strategy. Could be Fibonacci, for example. In case if you don't have one, just make a break in trading and trade with fresh head later. Now you can look straight into FOMO and become better trader. See, FOMO can make you skillful and your trading crafty. Thank you for keep learning.